Oh, there we go. Good morning, everybody. It is 6:32 on Wall Street. Good morning. It's 3 hours before trading starts. This is your QuantBox Live, where we get your global macro on every single morning at QuantBox.co. Hey, what does QuantBox do? It automates all your macroeconomic research. It logs into institutional databases and governmental databases around the world, like the Fed, the OECD, and a whole bunch more. Grabs all the data and puts it together in pretty colors so that a human can understand it. Because when we get it, it's just tables. Think of it as just think of it as 1,000 different spreadsheets. It's just gobbledygook. Doesn't mean anything to a human. So, anyways, QuantBox, our AI-driven data analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning, seasonality. We look at gold, oil, dollar, VIX, yields, everything, and then organize it so it's pretty and understandable. If you don't understand what any of that means, it's okay. Included in your membership is a statistical analysis course. Also included in your membership is a macroeconomics course. Cool. So anyways, looking at a typical chart here, you have trend, you have seasonality, you have fundamental analysis, you have institutional and retail positioning, you have the calendar, you have an explainer in English words, and then the summary. You get there by looking at all of this. Nice. So without further ado, let's get on with it. I just wanted to let YouTubers know that if you visit QuantBox.co, you can start with the trial. Oddly enough, for less money on an annual basis, for less money, you get way more stuff, and you see all these pluses. I've added many more. I've upgraded and upgraded and upgraded again. So I'm really trying to entice you to make a commitment because I'm putting a lot of time and energy and money into building this. So if you commit, I'm committed. I'm in, baby. I'm all the way in. 2 feet in the canoe. So anyways, welcome to QuantBox.co. $8 for a trial. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let me log in with the correct Gmail account. This is the Google Cloud, by the way. Okay. All right. Me, you. All right, 10-year T-note. We're right. This is the closing price, and it'll open again soon. And we're almost at 5, 4.97 ish right now. 4.96, 4.97. Holy smokes! Yeah. Why? The market has realized recently, because of non-farm payrolls, CPI, retail sales, for example, that the Fed is going to have to raise one more time. But we've known that on QuantBox for 6 or 7 months. Okay. So anyways, good for us. But the rest of the world's just figuring it out. Wow. So this gets us into an interesting situation because at some point I'm going to want to buy it. But because I have a 3, 4, 5, 6 year outlook, not because I'm reacting to something happening today. But it's getting there. It's getting very, very close to potentially hitting a bottom. But because remember, if yield is going up, price is going down. Oil's giving back some. Gold is giving back some. S&P 500. Ooh. I'm very disappointed in the market because I'm going to have to make decisions probably even today and tomorrow and maybe over the weekend to do things I don't want to do. I'm a bull this time of year. And so I want to be a bull, but I may not have that opportunity, and I have to do things I don't want to do. So yeah, lot going on. A lot going on in the world. Euro dollar flat. Bitcoin up, actually. It doesn't show much up, but relative to price, I think it is. Let's take a look at the risk gauges. Okay. Slightly risk off, definitely risk off, definitely risk off. And I got to react to reality. Okay. S&P 500 down for the month. Gold up for the month. Dixie up for the month. Yields way, 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 way up for the month. Look at that. 12% increase in yields month over month. And it's not month over month, it's 30-day rolling, but rolling, right? Yen flat, VIX, volatility's way up. It's nasty, Graham time. It's nasty. It's too bad. This is supposed to be a good, sort of like, I don't know, hunting season, but you walk through the forest for days and there's nothing. You in the trees. So, anyways, terrible. And I'll show you what I'm thinking. Okay. Usually we have up, usually we have up, usually we have down, usually we have up, usually we have up, and usually we have down. And that's not necessarily happening yet. Okay. Let me zoom in. It's probably hard for you to see. Again, like if we look at pound dollar, usually pound dollar goes up this time of year. Usually euro dollar goes up this time of year, right? Usually USD yen goes down this time of year. Usually Aussie dollar goes up. Usually Kiwi dollar goes up. Usually USD kitty cat is actually slightly down to flat, which means they're probably both strong or both weak. And this war between Hamas and Israel is probably going to mess all that up. So before I'm a victim, I have to probably rotate and rebalance my portfolio in midstream. Okay, normally you're not doing that in middle of October. Okay, but I love my money. I love it. I'm going to take care of it. It's my sweet baby. I just have to give up my ego. What do I love more, my ego or my money? I'm not sure. I'm working on that. That's the decision I got to make today. Anyways, look at the scatter plot. Oh my God, Becky. Yeah. Euro strong today. A bit, not much, but lots of euro up. If we isolate to indices only, okay, Japanese stock market way down. Usually you get yen strength in that situation. S&P, Dow, FTSE way down. Everybody else is just hanging out. So because I really want up, okay, the way I'm going to interpret this is that because NASI has more volatility, quite a bit more volatility, as measured by sigma. Okay, okay, it moves quite a bit more, and it's not way down. So, like, if S&P 500 is down 1.4, this should be down like 2.5, but it's not. So this is the decision. Like, if this drops down here today, I'm probably going to have to do what I don't want to do, because I already put time and energy into building a portfolio that should perform okay if it doesn't go my way. But I don't expect it to not go my way, right? So if suddenly the world changes around me, I can't be standing there like a fool saying, "Hey, where did all the water go?" And I'm just standing at the beach staring out at the ocean. Why is everybody running? You know, I need to react. So I don't want to. But if these get pulled up today, oh man, it's like right at the last second, right? I'm about to bail. So I really need to pay attention today and tomorrow. And if that's out, then even I'm forced to rebalance my portfolio from up to, what should I do to protect myself from the downside, maybe even make money on the way down, in particular without giving up yield. Okay. Gold down slightly, oil down a lot. Maybe isolate some of these, take a look at the majors. Oh, that's interesting. It's only plotting two majors. Okay. It's funny. All right. Here's all the cross pairs. It doesn't seem like a slope, right? Remember, we're trying to look really either the slope is going this way or the slope is going this way, right? One is negative, one is positive. And to me, it looks like this, doesn't it? So half the things are working, half the things are not working. Yeah. So be careful. That's because, and I'm going to interpret this through my own biases that we're probably in a situation where things have been down, but maybe now they're going to be up, right? Like that's what it kind of shows me. But I might be overreaching. So I got to be cautious. And then if it's going to reverse back into the direction of the trend, which I'm hoping, then I have to let that happen. I don't want to like try to reverse the market myself. But again, if it doesn't reverse, then I really need to go into how do you say, not safety mode, but I need to retreat. As a general, you need to retreat to save your troops. Okay. And my troops, they're all have the name Benjamin. Benjamin Franklin. Yeah, gotta protect my troops. So let's take a look at the world technically. Oh, where did it go? Let's go there. There it is. All right. So what's supposed to happen is Swiss franc, for example, gets strong, and so I'm going to move my two trades to break even. Took a long time. So, anyways, they're doing okay now. Ultimate target for Aussie is already indicated. We covered this yesterday and the day before and the day before that. So, anyways. Okay. Sure what I'm talking about? And that was probably the worst performing of the bunch because that's the one I traded. Here's another one. CAD Swissy worked a lot better. And if you recall from the seasonality, CAD is usually sideways this time of year, so that kind of makes sense. I stayed away from that as sort of my Swissy trade as the example trade because I thought with oil going to 90 on WTI in a scenario like that, remember we were at 82 and I'm like, now we have war in the Middle East, like, oh yeah, oil can go up and demand for gold could go up, I'm like, yeah, I'm not going to short the CAD, even though I understand seasonality. I'm not going to do it. And I don't know, you might argue it was the wrong decision because this is what it's done in those 2 weeks. Because if you recall, I gave you that advice way back over here. Um, cool. So now we're way down here. We're at support. The next level of support is there. So the way I read these tea leaves is maybe there will be some up soon and then some down this way. Okay. That's normal. The risk is this is an abnormal world and we trade it normally. The other one would just be like this. Okay. And it goes back to the example of the financial tsunami. Your normal technical analysis doesn't necessarily apply. Where it's definitely less effective, money's going to flow not because of a moving average. Money's going to flow because people are freaking out and moving money to Switzerland. And they don't give a dang about your M1 pivot point. Okay. They ain't looking. Okay. They're loading the G wagons full of gold and going straight to the central bank. So anyway, so that's carried off with the kitty cat pound Swissy. This is one I pointed you to because we are very bearish on the pound, and I'm like, here's one you want to look at. I call it the pissy. It's a great trade, pound Swissy. I'm like, you don't normally trade this, you probably should. There's the gap on Monday, and now we're here. Pull back in the moving averages, and now we're here. I said, don't turn your back on these Swissy pairs. I'm telling you, don't turn your back. Even if you never trade them, this is the thing to be watching. Gold, oil, Swiss franc. So if you've just been trading your normal thing, euro dollar, because that's what you do all day, every day, you didn't listen to me. Okay. Euro Swissy, we have double bottomed on the projected monthly low. Double bottomed. It's held. Okay, predictive moving averages are catching up. There is a plausibility, as I've already drawn, for something like this. But the pattern, the normal pattern is if you're selling there, this is your target. We've definitely completed that. Okay. And my best advice to you is normally you would counter trend this or at least consider it. Don't consider it this time because this move is not technical. People are definitely responding to these prices. That's definitely a technical plan. Okay. But because much of this could be fundamental or is fundamental, we could head down not just to S2, but S3. And we've seen that on many other pairs. So my best advice to you, because I don't know the future, but I can give you a reasonable experience to guess, don't counter trend it. Even if that's your normal MO, that your normal modus operandi is based on technical analysis. And the technical analysis is simply a self-fulfilling prophecy. It reverses because that's where most people take profit. Once again, I think there's a lot of emotion in these prices and less intellect than normal. I wouldn't do it if I was me. And even if I wasn't me, because I normally don't counter trend anyways, but even if I was a counter trender, not this time. I'm telling you, don't trade against a fundamental change. It could be war, it could be terrorists, it could be a change at the central bank. Suddenly, the Fed does something totally unexpected, right? Boom, the money's going to move. Don't stand in front of a stampeding herd of buffalo. Don't stand in front of a loaded freight train. Right. And Swissy stronger than yen. Look at the rare move. We had that massive move in the yen. Remember that? That's when the USD yen hit 150. And the yen the yen pairs collapsed. The yen went from ridiculously weak to unbelievably strong. And then 4 hours later, half of it back. Okay. A week later, all of it back. 2 weeks later, higher highs. But so I call this a full Monty. Okay. I don't know why, actually. I don't even remember the analogy. I don't think it's about older people becoming strippers. And I think it was a movie. Wasn't that the movie, The Full Monty? Yeah. And it's elderly folks stripping. And I'm like, yeah, so I'm not sure where I got that name, The Full Monty. But anyways, how about the whole kit and caboodle? Yeah, yeah. Anyways. See, I don't want to watch that movie now because I probably would look at it and go, actually, they're not that old. You know, that's the worst part. I went to this nonprofit conference with this organization I've been involved with for 30 years. And I go there and I see everybody that I've known for 30 years. And I'm like, damn, these guys are old. what's what's wrong with these people? Then I look in the mirror and I'm like, oh my God, I'm old too. Yeah, it's wild, huh? So if you've known people since they were 20, when they're children, it's amazing. If you've kept up those relationships your whole life. Now you might see like your family, your family that long, but you've seen your family constantly, probably, right? So when you haven't seen somebody for 25 years, you're like, oh my God. But they're thinking the same thing. Anyways, the full Monty. All right. Yeah. So here I am. Yeah, it's a very disappointing day for me because I have to make decisions, and I'm inherently lazy, and I don't want to make decisions. I've already put in the thought process. I've already looked at the research. I've already done the statistical analysis, and war has ruined it. So there's what I want, and then there's what is. And right now, this is very actually already negative for me. If I was trading, I would trade it this way. And you see the problem with that, of course, right? And in my retirement account, I started buying in this period. So I did put money to work in roughly those areas. Um, because remember I got in early before the drop based on timing and stuff. So what do I do? Well, it's my job to worry, isn't it? If I was managing your money, you'd want me to be worried, but also worrying's not enough. Okay. So, anyways, I'm on the mean. I'm on the statistical mean, but it's a negative slope. And this is the plan. 50% pullback is it's within tolerance, but I don't like it. I feel like the plane's about to stall. you know. Yeah. So, anywho's, yeah. Mm, mm. Got a tough day or two. Tough day or two. I'm hoping we get a sideways day today. We're slightly up today so that I have time to kind of think about it again tomorrow because that gives me some time. If it's a bloodbath day, I have to respond. If it's a sideways, then maybe I can get through Friday. And if I can get through Friday, I can think about it all weekend. And I can come up with plan A and plan B and plan C and all that kind of stuff. And I mean, I just want to avoid having to do it because it breaks everything down if I have to get out of all these plans that I've already set up. So, anyways, that's where I'm at. Maybe I can get to Monday, and if I can get to Monday, maybe things will be different next week. Maybe Biden did fix everything. In the, maybe he did. Yeah. All right. Cool. All right. So oil. Let's clean this up. Let's look further out. And that is a buy zone. I drew this yesterday, and so it dropped down there today. Big drop, but that is a buy zone. A bull's going to buy, and so I mean it's still buyable if you can inside of this 4 hour. If you can catch like a little dipsy do, you could fire this up, and maybe you get this. And I would suspect that honestly. So, but you do you. I don't know. And technically, that's not great. You can see the moving averages are not great. The 55 is predicting a double top. So your risk as a bull is that the bears tear this trade down. Now, what would create that? Global recession. So you have to you as a trader and investor have to decide on what narrative you're going to trade. You can't be both. You can't be a bull and a bear. That's a pig, and pigs get slaughtered. Okay? So you have to stand for something or you'll fall for anything. So the narrative is we're going into global recession because of war. Or your narrative is because of war, there's a threat to scarcity. So, okay, this is supply and this is demand. Pick your narrative. They're both right. That's the problem. You're like, I have to take the fundamental course again and figure out which one's right. They're both right. But which one are you? Because the most important thing about making a decision is knowing that your decision is wrong. So if you pick supply and you think it's going to go up, and by the end of the, if 3 hours from now we're down here, yeah, bro, you're probably wrong because lower lows don't exist in an uptrend. Okay. Being right is easy. You guess. And it goes up, and you're like, see, I'm right. What takes talent is knowing that you're wrong and having the strength and fortitude to get out before it hurts. That's way more difficult than being right. And that's what I'm facing today. I know I'm right in all my investments in the stock and bond market right now, in my retirement account. I know I'm right. I've done all the research. I'm 100% right. Except I didn't price in the war. That didn't exist when I made all those decisions. So if I'm going to be wrong, I need to have enough strength and fortitude to override my ego and say I'm wrong. Do you think that's more difficult? Uh-huh. Yeah, that's way more difficult. Okay. You have to be strong. Okay. Imagine Superman was shy and he didn't want to wear tights in public. We wouldn't have had a superhero. He's like, I can fly and stuff, but I don't feel comfortable in my tights. Yeah, well, you need a certain strength of character to put on tights and walk in public. It's true, regardless of your superpowers. So, yes. I mean, even Batman, you remember the original Batman? He didn't look good. I think he knew it. Huh? Shy superhero. That'd be great, huh? That'd actually be good. We should probably create a comic book, huh? The Shy Superhero. The phone rings. I have call reluctance. It's Commissioner Gordon. He's going to make me do something dangerous. Yeah. Anywho, Brent, you got to be watching for $100. We're nowhere near there, so that's cool. I thought this would be higher by now. So, yeah. But remember, a lot of these pops in commodities had to do with the imminent ground war. Now, I don't know if it happened on purpose or it just sort of happened organically, but Israel not attacking in the ground war, like instantly. I mean, they bombed from the air, but not rolling in tanks immediately, whether you agree with the situation or not, from a strategic point of view of what I studied, and I took a lot of different classes at Harvard about strategy. Look, I have a management degree, okay? So this is what you talk about all the time. Not rolling in right away was the right move. But now having a parade of leaders from other countries around the world, big countries, Germany, the United States, the UK, so on and so forth, rolling in and showing support for Israel. Oh my God, that's a really good play. It buys a lot of time so you can get more intelligence before you attack. But unfortunately, as Biden kind of ruined it by saying, it's us versus them, that kind of defeats the purpose. It should just be said that these leaders are supposed to come in and talk about peace, but it also shows an alignment. But when you say it's us versus them, you kind of put yourself in the conflict. And now, like, what? Now it's the United States versus Hamas in Israel. Like, you're not supposed to do that. you're you're supposed to show up and just show that you're there and you're trying to negotiate for the citizens, the innocent bystanders, and that kind of stuff. But you show a parade of these global leaders saying, we condemn Hamas and we're here to protect the people of Palestine, right? And bring world peace and order. That's actually a very good move. And I don't know if Israel planned it or if it just happened organically, but very cool. Very cool. So now we've had a week, these leaders. So Sunak is in there right now from the UK. And that shows a lot, because whatever narrative we're being fed, because I don't think we get, we don't get the full truth. We get a truth, but I don't believe at all it's the full truth. But I also know, as Biden would say, the other team definitely gets the opposite narrative. Okay. And the odd thing about this is the internet was supposed to free us of all of that nonsense. Adam's like, a lot of action here. I imagine so. Imagine so, Adam. It'd probably be a good time to fly out and visit you, to get close to the situation and then sort of hear from another culture. I should probably see if I can get some TV on the internet from the region. Yeah. Well, send out the Royal Jet and yeah. Okay. Oh, there are. Yeah. So in my research for flights, you can fly to Moscow from Atlanta for $3,000, which is way more than normal. You can fly to Kiev from Atlanta for $3,000, which is a lot more than normal, but you can do it. And about, I'd say a year ago, maybe even 6 months ago, if you wanted to fly from Atlanta to Paris, it was $1,200, $1,000, $1,200, and now it's 500. But you have to book in advance in that. So like 3 months from now. So that makes it almost like year over year. It is, the prices are coming down, which is interesting. But Asia's still very expensive, and I think that's a lack of pilots. But it'd be interesting. Qatar would be interesting. I, if I was in Dubai, can I drive to Qatar? No, probably flying would be better, huh? Would it be safe? Would it be interesting? I don't know how interesting it would be, but yeah, the longest 7 hours. Yeah, that sounds like a great. Yeah. All right. All right. What do I want to do? I guess we'll just show Bitcoin. It's interesting. It did hit the bottom of the range and it did go up. And now we are just farting around. There's the M4, which is the October um, conservative target. Actually, let me mark it. Here's the conservative target. Oops, let me try to get that correct. I'll use an actual line draw. Okay, there's the conservative target. Here's the aggressive target. And in that 1 4 hour candle, we respected both. Cool. And then there's whatever the heck this thing was. A tweet, wasn't it? Somebody tweeted something about something. Wow. Uh, 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 uh. Was that's what it was, burned? Thank you. Yeah, people desperate for some good news, right? Yeah. Well, it just shows there is pent up demand. I wonder about crypto, though. If we move relative assets for the next 2 or 3 years, that's a long time for Bitcoin to maybe not do much. Okay. Like it's really competition. Like think about what interest rates do and why central banks change interest rates. They're they're enticing you to make selfish decisions, meaning you want to do what's best for you, and your choice is keep in the bank and earn no interest. That's a real choice. Keep your cash in a bank, and this is like a couple of years ago, right? Or buy a right, or buy a treasury so your bank account pays you zero. A treasury pays you 1%. Doesn't like way less than inflation. So you could do that. So what would you do? You're like, well, that doesn't sound good to me. In particular, if you're retired, which means you got money. So if you have a real amount of money and you're like, I can't live on 1% with 3% inflation. I'm gonna outlive my money. So what do? You make a selfish decision. It's not bad. Isn't bad. You're going to make the best decision for yourself, and you decide to take the risk and put it in the stock market, right? Or you take the risk and put it into real estate. That's what it's designed to do. So if the dollar remains strong and yields stay relatively high, higher than inflation on a 10-year or something like that. And right now, a 2-year pays 5.25. So why do you need Bitcoin? Oh, well, I don't believe blah, blah, blah. All right. So what'll happen is that it'll really squash the narrative for a lot of people. And then when things return to normal, and I don't know how long that's going to be, but the dollar will weaken again, which is just a consequence of being a reserve currency and the largest economy in the world. That's just a consequence. The currency weakens. Study any superpower, it always happens because that's how it works. So, some period in the future, the dollar weakens again. And then suddenly Bitcoin's really attractive. Yields come down, so suddenly crypto is more attractive. But if you can buy a 2-year note and earn 5.25, you don't need no stinking Bitcoin, right? So anyways, there's competition and for that. So it's not that I don't believe in crypto or blockchain. I'm just saying it the economic and monetary um, policies of our situation right now doesn't necessarily make Bitcoin an attractive alternative. There might be a better alternative to right. So anyway, we got this all locked out. Okay, there's the wicks. Boom. It's not perfect. No, it's not perfect. You got to do your job. It's tough, but there's the strategy. The thing is now, if you're not on this trade, and this is Kiwi dollar, what you're going to look for is it happens now. Okay, like that. The other thing you need to do, and I just realized this because I always I look at the charts and I see what I want to see, and everything else is irrelevant, so I don't even see it anymore. But I need to switch this up. Okay. And of course, I already had that planned out yesterday. So between yesterday, today, and tomorrow, if you're going to trade the breakout, that's how you do it. Mm-mm. So Swissy strong anyways, as expected. So and then now dollar is strong, and we went a whole week without that, and then boom, it showed up, right? So be careful of that dollar strength. So I hope when going back now to Monday of last week, I hope you wrote all those things down. What to do in a time of duress? And I said you need to be trading contingency plans, not your normal everyday trades. Okay, this isn't fundamental. It's not technical, and so we said look at gold, look at oil, look at Swissy, look at dollar, and they should all appreciate if things get worse. And well, they did. Which reminds me, I just want to point that out one more time. Gold at a very, very serious price. Normally, you would pay a lot of attention to that. And I think what is more likely now than than a normal situation. Okay. What's more likely now than in a normal situation? It's just probability. Based on market conditions, normally, a trader would start bailing on this position now and would never consider re entering. But based on current market conditions, the reality is this move to the upside and maybe even beyond is more probable than a normal situation. Okay. Okay. In particular, if something unexpected happens in regards to the war in the Middle East. Now, I spent time thinking about this. What would I do if I was Hamas? I've thought about what I would do if I was Israel, but what would I do if I was Hamas? Well, we get the leaders of free countries around the world. So Germany, UK, United States are all classic examples. And everybody's watching Gaza and all the drones and all the satellites, and everybody's looking at everything. So Hamas should probably attack outside their country. And that would make news. I don't know if it make the right news, but maybe it makes the right news in the Middle East versus um, these European and such countries. So, you know, I would be on high alert if I was the United States, Germany, or the United Kingdom now. And I think that's even more likely because what is Hamas going to do, another sneak attack? Probably not, because all the eyeballs are watching those places. So what you need is your sleeper cell in one of these other countries, right? Doesn't it only takes one idiot with a bomb. So I would be on high alert for that. And if something like that happened, gold and dollar. Okay, like I don't want that to happen. I don't. Yeah, but I need to tell you now before it happens that if it happens, and I think that increases the probability, right? You could see Hamas would say, down with Germany, down with the UK, down with the US, right? And so there, it entices a response. So I'd be careful. I don't think it happened in the United States, but it's been done. So just I'd be on high alert. So if something terrible like that happened, go straight to dollar, go straight to gold. Okay. That's all I'm trying to say. Put it in your contingency plan. I'm trying to teach you how to trade and invest when the world is in duress. Okay. Cool. So I've already gone too long. I apologize for that. So peace on earth. May the pips be with you. May your profits be above average, and I'll see you soon. Cheers.